really happy that the market has also taken positively to the results that we have declared. We have been continuously performing well, and the focus has been on the increase on VNB margins. And towards that, we had taken a directional shift towards a better product mix, and that has resulted into a continuous increase in the VNB margins. We still feel there is scope for some more improvement in VNB margins. Though you talked about 18.8% for the period of 9 months ended on 31st December, for quarter 3 we had done around 21% plus. So we expect the margins to go up at least by another 1 to 1.5% in the current year. But we cannot be talking because it's a factor of so many things that happens. The flare of the market, the product mix actually that gets sold, and also on the external factors like the yield curve and another thing. So we are positive that we can still be showing some more improvement in the VNB margin in the current year.
Okay, so you're giving the confidence that in current year there will be some more improvement in margin going ahead. So another important development in your result is that share of non-par in individual business from last year's it has gone up by 10%. So last year it was 26.64, now 36.64. Yes, sir. So what really contributed in this, and going ahead, what would be the ideal mix?
I think there has been a directional shift that we had brought in, which has resulted into this kind of a product mix getting inclined more towards non-par in the recent past, and I think that's also the flare of the market. People are comfortable talking about guaranteed return products, and in a market where the interest rates are going down, the flare of the market is also towards guaranteed return products. So the share of non-par has been increasing. It has reached almost around 36.8% now, which has almost been consolidating. Actually, if you see the quarter 2 and quarter 3, there has not been much of an increase.
Yes, sir.
I expect this to settle somewhere around this. There can be some more increase, but not much beyond this.
Not much beyond this. But from last year's to this year, what really contributed? I mean, what change in strategy, product mix? Because from last year's, the share is up by 10%.
Yeah, actually, see, as you would have noticed, the products that we have launched in the current financial year, or rather after the IPO, have all been on the non-par side. So we have a good number of products now on the non-par side. We have been looking at the product portfolio and looking at whether there are any gaps we observe. We try to immediately fill it with a new product on that line. As I told you, the market also has been taking very comfortably towards the guaranteed return product. So we have been making this shift, and it has also been moving the way, which has contributing to the increased non-par business for LIC as a whole.
Okay, sir. Sir, start again from the first question. How much away or far from the 25% VNB margin target?
No, we are not targeting any particular VNB margin. Of course, the other players, the market is close to around 25%, but we have to also look at the market conditions, looking at what kind of products has got the flare of the market, and also looking at the yield curve and the investment scenario in the market also. So when it varies, there can be a slight change in the VNB margins also, because there are underlying assumptions. So we are expecting that the market, the way it is moving, there can be an improvement certainly from the current levels. And as I told you, the last quarter itself we showed around 21 plus. So there can be some more improvement in this in the days to come. That's what with our continuous focus on the expense ratio rationalization and improvement in the yields we'll look at.
Sir, when we talk about LIC, so you are a big investor also. So in the Q3, how much profit booking in equity market was done by LIC, and now going ahead, how investment strategy will change because markets are pretty much volatile?
No, as a prudent investor, you have to keep churning your portfolio, and this is a part of your strategy. One, also when products are designed, there are some underlying return assumptions. So we need to match up to the reasonable expectations of the customers also. So we keep churning the portfolio, and when the opportunity presents itself, we also get a good return booked on that. So if you look, it has been it has been growing consistently. We are managing based on the total assets under management. As AUM improves, the quantum of investment returns also goes along with that. I would not like to give exactly any particular number because it keeps varying from quarter to quarter. But we look at the opportunities and the market which is presenting itself the opportunity for us to earn that kind of an investment returns.
Okay. So one question that we've been asking from last so many quarters about your foray into health insurance business, or to get a strategic stake in a health insurance company. So can we say that now you are not going fast on that stake buying and it's on back burner?
I won't say it is on the back burner or it has been in the forefront earlier. See, we were evaluating the possibility of our taking a strategic stake in a health insurance company because it was also being talked about as the composite license as a possibility in the Insurance Act amendments. There are two things. One, there should be opportunities available. It is not that every company is waiting for somebody to invest in them or whatever it is. So we have to look at the opportunities that are available. Now that the amendments to the Act has come and the composite license is not immediately, so the question of foray into health insurance does not arise. As a big investor, we are looking at various sectors in which we will be able to invest, both as an ordinary investor as well as a strategic investor, looking at the opportunities in the market. So we will continue to be looking for that kind of opportunities, and health insurance, standalone health insurance company is one such opportunity that we are evaluating. But as you said, now there is not a great urgency in doing it. We have to be very clear in making proper due diligence and other things, and see whether the investment opportunity that is available is in the best interest. So as I told you, currently there is no need for going fast on that, but we will be looking for opportunities, and if a good compelling opportunity is available to us which can add value, we will certainly be looking at that.
Okay. Sir, do you think that health regulator in health insurance is also a kind of hurdle where you cannot buy, means if you want to go ahead to buy a stake, because a lot of complaints also in health insurance business and there is no health regulator. So LIC can get a bad name if they venture into health insurance business.
As you mentioned, that is one of the most important considerations that we have to have before taking a final call, because LIC is the growth, LIC's standing in the market is based on the trust that has been created over a long period of time. So our association with any insurance company should not be in such a way that it brings down the reputation of the organization. So as you said, health insurance has been a tough business, and the costs having been increasing, it has been tough to contain. And so we have to take a very conscious call on this also before taking a final decision on making a strategic investment.
Okay.